Maya has 2 emails open. Her LLC just got approved, and a service wants $200 for her EIN. By the end, you'll have all 10 steps in order and know which paid tools are worth it. Park that $200 email. The real mistake comes first. Most new businesses die the same way. Somebody built a thing nobody asked for, long before any paperwork mattered. That sets the order. Demand first, paperwork second. File the LLC before you have a customer, and you're now paying a state fee, a registered agent fee, and an annual report deadline for a business that may not survive its first week. Validate first, and the same paperwork takes 1 afternoon, funded by a customer who already paid you. Step 1, and it's the step most people do backward. Pick who you serve before you pick what you sell. The failure mode has a name: founder first. Fall in love with an idea, build for months, then hunt for customers who never asked. The fix is customer first. Start with a group you already know, your industry, your hobby community, the parents at your kid's school, and ask what problems they already have. One worked example: a dog walking app. Founder first builds the app, then discovers all dog owners ever wanted was a trusted person with a key to the house. Customer first talks to owners on day 1 and learns that for free. 2 filters. Choose people you can reach this week without an ad budget, and people who already spend money on this kind of problem. A great audience with no budget gives you a hobby with fans. Step 2. Mine for problems. And there are 2 good places to look. The first is your own week. 4 prompts worth stealing. What irritated you this morning? What sat on your to-do list for over a week? What you regularly fail to do well? And what did you recently want to buy but couldn't find? Small, boring annoyances are the raw material. The second place is the customer group from step 1. Their complaints, workarounds, and wish lists. Then, the discipline part. Generate at least 10 candidate ideas before acting on any. Treat the first idea as a rough draft you can throw away. To choose among them, use a 3-circle test. Real market demand, your actual skill, what you actually care about. Keep what sits in the middle. Step 3, the one that separates real businesses from expensive hobbies. Validate with money, not compliments. Ask friends whether they like your idea, and they will like your idea. That's what friends are for, and it's worthless data. The real test is asking for payment before the thing fully exists: a pre-order, a deposit, a booked slot. One example: a home-cooked meal service pre-sold by email, money collected through a payment app, before a single meal was cooked. That first dollar is the hardest thing in this entire video, and the moment it lands, you no longer have an idea, you have a customer. If charging feels premature, give something small away free and measure who signs up. But leads are not customers. Somebody paying you is step 3 past. Step 4. Build the smallest version that delivers the value. The minimum viable product. The canonical story. Dropbox in 2007 tested demand with a 3-minute demo video showing features that didn't fully exist yet, and the sign-up surge justified building the real thing. Your version is whatever proves the promise fastest. A landing page, a service delivered manually before any automation, a single template instead of a library. AI assistants can now generate a working prototype or landing page from plain English prompts in an afternoon. So the smallest real version of most simple ideas is a few hours of work. The discipline is resisting the upgrade itch. Every feature added before a stranger pays is a bet with no information. Step 5. Get your first customers the unscalable way, by hand. Write plain, jargon-free messages to the people from step 1. I made this thing that fixes that problem you mentioned. Want to try it? Early growth is personal, and the famous example is Airbnb. The founders reportedly emailed and visited their own hosts, discovered that bad listing photos were choking bookings, and fixed growth with a camera, not an algorithm. Prefer free channels first. Short-form video and word of mouth over paid ads. So, how do you collect that first dollar and protect yourself doing it? For a one-off sale, a payment app or a basic invoice is enough. Once you have real clients and scheduled work, HoneyBook bundles proposal, contract, and invoice into one flow. And Bonsai does the same with more weight on contracts and time tracking. Neither is worth paying for while you're testing with 2 or 3 people. A written agreement and a payment link cover that. Quick recap. 5 steps in, no form filed, and no dollar spent on paperwork. Everything past this point is the formation half, where the tools worth naming actually live, and where that $200 email from the opening is waiting for us. Step 6. The name. The freeing advice first. Don't overthink it. A name can be changed later, cheaply with a doing business as filing. But here's the 10-minute check worth doing anyway. Search the domain availability, the social handles, your state's business registry, and the federal trademark database for conflicts. A name that's legally fine but owned everywhere online will tax your marketing forever, and a trademark conflict can force a rebrand after you've printed everything. Step 7. The legal structure. And a stage-based mapping is the clearest way to think about it. Testing at hobby level. A sole proprietorship, no separate entity, no protection, no overhead. Serious about it. A single-member LLC, a separate legal entity shielding your personal assets if the business gets sued. Profitable from day one, like a contractor with immediate income. Ask about S-Corporation status, which can reduce taxes on profits but forces real payroll and a separate return. Worthwhile roughly once the business clears somewhere around $40,000 to $60,000 of profit a year. The zone accountants usually name as the break-even for the extra overhead. Building to sell in 5+ years. Ask about C-Corporation status and qualified small business stock, QSBS, which can make qualifying sale proceeds tax-free. Hold this loosely. It's US-specific, rules change, and this exact decision is where one paid hour with an accountant earns its fee many times over. Once you know your structure, file it yourself on your state's Secretary of State website for the state fee alone, or pay a formation service to walk you through it. Both are legitimate. Fit depends on you. And one of these names coming up will offer to file your EIN for $200. Hold that thought, because turning that offer down is the whole game. Cheapest possible LLC, comfortable reading a state form yourself. Busy built its reputation on a low-cost starting package. Want ongoing compliance reminders for your annual report? Zen Business is built around that dashboard. Not a U.S. resident forming a U.S. LLC from abroad, a problem most sites handle badly. Doula is built for that, with U.S. banking help included. Northwest Registered Agent is known for real customer service and strong privacy. LegalZoom is the oldest name in the category, broader legal services beyond formation, priced higher. Taylor Brands bundles formation with a logo and brand kit. Skip that while you're testing. You don't need a logo before a customer. That's decoration again. Underneath all of them sits a registered agent, a separate product from formation, a person or service with a real in-state address to receive your legal mail, required in most states. Be your own for free with a real in-state address you don't mind on public record. A paid one, sometimes free the first year, then roughly $100 to $200 a year after, mainly keeps your home address private. Here's the one rule that overrides every name on that list. When any of them offers to also file your EIN for a fee, say no. With an SSN or ITIN, the EIN is free and instant at the IRS website every time, no exceptions. With no SSN and no U.S. presence, that tool is closed to you. Your paths are phone, fax in about 4 business days, or mail in about 4 weeks, and Doula or firstbase.io filing it buys speed and handled paperwork. Quick note, some description links earn this channel a small commission at no extra cost to you, never changing what gets recommended. The side-by-side is built, linked in the description. Step 8. Make it official. And this is the easy part. Registration happens on your state's Secretary of State website. A day in fast states, roughly 2 weeks in most, with a one-time filing fee that varies by state, commonly somewhere between $50 and a few $100s, plus a smaller annual report fee in most states after that. Out comes your Articles of Organization, proving the entity exists. Then the federal tax ID, the EIN, and this is where that earlier warning pays off. With an SSN or ITIN, it's free and instant at the IRS website, while third-party sites charge roughly $100 to $200 for the identical form. Same number, same speed, minus your money. No SSN, no U.S. presence. That path is closed, and phone, fax, or mail through a formation service gets it filed instead. Check which path is yours before paying anyone. Step 9. Take your articles and EIN and open a dedicated business bank account with its own card. Mixing personal and business money is how bookkeeping nightmares and legal protection leaks both start. One note: still testing with 0 customers? Skip this for now. The same demand before paperwork rule applies here too. Once you need it, 2 accounts are built specifically for new small businesses. Found pairs checking with built-in bookkeeping and quarterly tax estimates, which is the cheapest way to stop spending money that already belongs to the IRS. Novo suits early-stage businesses with free transfers through common invoicing tools. Whichever you pick, open a second savings account the same day and move your tax percentage there every time you get paid. Check licenses and insurance for your industry. One conversation with an agent covers it. Step 10. Books and taxes. And the rule is volume-based. At low transaction counts, a spreadsheet is fine. Once transactions multiply, software earns its keep. QuickBooks and Xero are the 2 most widely used platforms. FreshBooks leans toward service businesses that invoice clients directly. Wave's core invoicing and accounting tools are free, useful while you're still small. Keeper uses AI to scan transactions for write-offs automatically, built for freelancers who'd rather not categorize every line item themselves. 2 habits from day 1. Set aside 25 to 30% of every payment for quarterly estimated taxes. Skipping them is a beginner classic with penalties attached. And decide between doing your own return, fine for a simple sole proprietorship, and hiring an accountant once a separate business return enters the picture. If you'd rather hand the whole thing to a professional, 2 services are built to do exactly that for a small business. 1-800-ACCOUNTANT pairs you with a real accountant for bookkeeping, tax filing, and questions year-round. Collective is built around the S-Corp path from Step 7, handling the payroll and extra filing that election requires. Check the reviews first. Then, the 3 questions every guide dodges, and they're the ones that actually decide everything. 3 questions ordinary guides never answer. First, how long do you test before walking away? Set the decision date before you start, 1/4 of real effort on steps 3 through 5, then evaluate. Paying customers or a clear signal, continue. Polite interest and $0, change the idea, not the deadline. Second, when do you leave the job? Later than the influencers imply, the boring math is runway. Months of living expenses saved, a health coverage plan, and revenue covering your baseline before the paycheck stops. Going all in is what happens after steps 1 through 5 work, never before. Third, partners. A co-founder means writing the equity split, roles, and exit terms down on day 1, while everyone still likes each other. Unromantic, all 3. So is payroll. The full sequence, one last time. Pick the customer, find the problem, validate with real money, build the smallest version, sell by hand, and only then name it, structure it, register it, bank it, and book it. The first 5 steps cost conversations. The last 5 cost a filing fee and an afternoon of forms, plus whatever paid tools fit you, and now you know which ones those are. Every service named, formation, registered agent, banking, and bookkeeping, plus the free government links that beat all of them on price, sits in the description in the order you'll need it, so you're not hunting for any of it from scratch. Your next 48 hours are steps 1 through 3. 1 customer group, 4 problem prompts, 10 ideas, 1 ask for real money. That's a complete start, no paperwork needed. The fine print. This is educational content, not legal, tax, or financial advice. The formation half is US specific, and the structure decision deserves a real conversation with a professional before you file anything permanent. Every useful link from this video, real services and free government tools alike, sits in the description. If this finally put the whole path and the actual tools in one place, subscribe. The next video walks through week 1 of running the business you just started. See you there.